Welcome back, my people. So today, what we're doing today is day five. Currently, what time is it? It's like 7 o'clock in the night. Um, I doing a video every day because I leave my job to start trading 100% full time. It's see that light fucking bright. I using my iPhone to record now. I don't go to look in the camera because all get that bright. But today, what we're doing is some back testing. As we can see, we're doing some back testing using FX replay. So let me go ahead, start my fresh strategy. So we're going to be using a fresh strategy on $100,000 balance trading NAS 100 from, let's say from, we're going to do the whole month of August. Let's see what the results are. So we could either end up in a drawdown or we could end up in a profit. We'll be risking 1% on each trade, and we'll be using my trading plan, which says that I could take potentially two trades every day. My trading time for that back testing, like for that strategy, is from 9:30 to 12 o'clock, and that's it. And before news, I have to move out of trades 30 minutes before all news, and I could only get into trades 1 hour after news. Red folder news, that is. And my trading strategy is basically like liquidity, basically ICT concepts. I learned it from TJR trades. I mean, you should be familiar with TJR trades. We're just going to back test that strategy um for 1 hour. Right now it's 7:03, so at 8:03, I will see you guys. Yeah, that's it. So let me start the back testing. I'll talk through some part of it, but it's going to be like a time lapse type video. So I'll talk for some part of it, but most of it is just going to be like a time lapse, and at the end, I'll show you all the backtesting results for August. Now, it could be in the red, it could be in the green. Who knows? Every month have a different. Basically, with a strategy, you could have some losing months, you could have some winning months. But let's see how it goes. Um, and you're on the ride with me. So today is day five of me quitting my job to trade professionally, 100% full time. And yeah, let's see. So from the start, that would be at 9:30. Now that candle will be at 9:30. All right. So what we seen from the start of there, we seen a liquidity point right down there get filled, right? Liquidity point get filled, and it start going in the uptrend. So we see price fill liquidity on the 15 minute and start going in an uptrend. I'll just explain that for y'all, and then I'll just back run through it, and then I'll that's okay. Ah, I have to. I have no idea. My woods thing today. What I will do is that I will run through the mindset of me viewing the markets at 9:30. I'll basically put you all inside of my head so you could see how I thinking about the markets, or what's going on in my mind before I take a trade, or before I even decide think about taking a trade, basically. And then I'll just give a time lapse and then put you all at the end. At the end, I might not do the whole month because I only have 1 hour to back test. But whatever I do, I'll just show you all the results. Now, let's get back to the explanation. So we see on the 15-minute price, sweep liquidity down there. For that light bright. That light fucking bright. We see price sweep liquidity down there, and then it creates a high right there. So what we're doing is we're finding the equilibrium of that whole move. If we look on the higher time frame, we're going to see these little candles as one, basically one big move. And after that big move, what we're looking for is the equilibrium, right? What we're looking for, what that equilibrium basically telling us is that when price is on top of that equilibrium, that means sell trades are at a higher probability of winning. And when price comes down inside of that section of the equilibrium, that means that buy trades are highly likely to win. All right. So that's what the equilibrium means. I just going to put the little sell on top. We're going to put sell on top. We're going to put buy at the bottom. All right. The buy is supposed to be green. The sell is supposed to be red. Bam. So we have that there. What we're going to look for now. So that's happening on the 15 minutes. We see sell there. See buy there. On the 1 hour, what we seeing? So, but in the overall trend, so we don't need to check all that. We don't need to check all that. We use that. We use that alone to make some judgments what we should be trading. So if you look closer on the 15 minute, we're seeing 15-minute break structure to the downside, but then it start going up. So 15 minutes was basically in a downtrend right there, but then it start going up. So what does that mean? 15 minutes sweep liquidity, and it creates a lower low, basically a swing low, and now we're creating a swing high. So we do that same equilibrium point right there, just so we could know where where we would be most likely to win a trade. All right, copy that. TRC, TRV, right there. TRC, TRV, right there. Right. So we see a little mini equilibrium zone in that big whole trend. So in that trend there, which is the big trend, we will get in an hour from down there to down there. That's the equilibrium. Above that zone, we'll be looking for price to sweep liquidity to go down. But below that zone, we will be looking for price to sweep liquidity, like local liquidity right there. We're looking for price to sweep that liquidity and go right up. And we see the same thing happen, but on a smaller little wave. So that's how you get in basically accurate places where you could take the best trades. So in that zone there, I wouldn't take buy trades. Why? Because on the bigger zone with the 1 hour, above that zone is sell, right? And then below that zone is buy. So I would have to wait for price to come down right below that zone to buy instead of buying there, because I know it's getting complicated, but for whoever understand, you all will understand exactly what I say. Okay? So it's 9:40 right now. I just mark out the charts. We're going to move down to the 5 minute to see what price does. Remember, right now, since the market is above that sell area and that above that equilibrium point and that sell area above that equilibrium point, be looking to sell. What can we see on that side? We see places where there is liquidity. We're going to mark liquidity for purple line. See another liquidity up there. So we see 2 points of liquidity prices passing through that it might reject to go back down on the downtrend. All right, price could also go above to that liquidity. Go on the 5 minutes, open up. What we seeing? The price going up. Let's see the five. Let's see the 5 minute. Let's see if that's a liquidity point. Not a liquidity point in the 5 minute price. Most likely going to go up and hit that and then reverse. Let's see. Let's see. Oh my fucking gosh. So it turns out on that day, no, not that day would have a trade. Let's re-roll that there. Let's re-roll that. I think I was back testing a little bit too fast. So we could see a 5 minute high right there. We could take a trade of that. On the 1 minute, if price sweep that high and start going back down, we could take a trade on that. All of that is in our trading plan. We see the 1 minute sweep that high, then it go below. It go below that low? No. That's the next. That's a black candle or a blue candle? I have no idea. I'm going to take it as a black candle. If price go below, close below that line, we definitely taking a trade. But it didn't. Go into the uptrend. So we see price close. We close on that candle on the warning, but we're going to take a trade on that candle. All right. See how it's looking on the 5 minute. That's how it looks on the 5 minutes. Take that trade right there. Going to be risking 1%. You put it at the top, the highest. With that break structure on the 5 minute, we're going to look for zones to target. I think that could be our first zone. Could be our first area of interest. Not there. And that could be our first zone. That trade could put us in a down. That trade could have us. Let's see on the feet. That trade. Okay. To target half of that if that 50 FVG as our full TP. Right? Target that reach as our full TP. And that's our first TP. And we'll find a TP someplace in the middle there as our full. Alright? Someplace in the middle. Got it on a 1 minute. See, okay, that's a liquidity point right there. Probably between that. Probably between that. Okay. So we have all our TP set, which is supposed to be orange lines. Our TP is supposed to be orange lines. My back testing. Yeah. Let's enter the trade. Market. Three TPs. First TP at 50%, second TP at 25%, and last TP at 25%. Which that shit around. 10, 5%. And as you can see, we're taking the trade at 10:31 a.m., which is within my trading window, 9:30 to 12 p.m. on the 1 minute. Why are we taking the trade? We see 1 minute price action break above that 15 minute, that 5 minute liquidity, which is right there, which is a high. Liquidity sits above highs and lows. See price break above that, and then price start going down. Price break structure to the downtrend on the 1 minute. Let's see how it goes. Wow. I think I go to lose that trade, guys. Let's see if it hit in the first TP. Wow. So we did the first TP. When price hit our first TP, what we do? We put it at break even. Is $0. We put our stop loss at break even. That fucking stop loss, boy. Wow. Something the stop loss not going exactly on zero, but I mean, you guys know what's up. So we put our stop loss at break even. So we're already winning the trade. Let's see if it's going to hit our second take profit. That visual to hit our second take profit right there. No. So price hit our break even instead. We're still up on that trade. It after 12 o'clock, so we cannot take any more trades right now. So we have to move on to the next day. And it's going to keep on doing that for the next hour. So we have $501 on that trade. That's risking 1% on a $100,000 account. We have $500. The trade took TP at TP1, then it reversed. Let's see if it would have our stop loss. Yes, it would. That's why we put our stop loss at break even. All right. On to the next day. The reason why we take that trade instead of the trade before is because the risk to reward ratio is at least a 1 to 1. We're risking one to get one and at least our first take profit. Because chances are, if it's less than one, that means price just going to revert back up, sweep liquidity, and go back down. And it's just not a good trade to take because you're risking basically one, you're risking one risk for less than one reward. So it basically would be not a good decision. But on that trade, they have a nice risk to reward, so we're going to take it. Sell, we above both sales on the equilibrium thingy. You actually understand it. I doubt you're going to understand it. Let's see. We're going to put our second take profit. Alpha profit. Second take profit. Alpha. See? So we get stopped out in that trade. That's our first trade for the day. The second trade. Our rules. Alright, guys. So we currently finished the back testing session. Currently finished the back testing session. That was the strategy we was testing out for the whole of August. We didn't get to finish the whole of August, but I think how much trades did we take? We take 6 trades right there on the 4th, 6th, 7th, 8th, 11th, 12th. We could see right now we up 2.97% on the $100,000 account. Um, I mean, my next back testing, um, on my next back testing video, which would be tomorrow, I'll back test the rest of August. Stay tuned. And yeah, we're making bank right there. 2.97% risking 1% on the account with my strategy. So I think that's pretty good, and we could see the different analytics. Like on Tuesday, we won the most trades at 10 o'clock, which is proper time zone. 10 o'clock, won the most trades at 11 o'clock. We lose one trade, our trades or sales. Yeah, awesome shit. Yeah. Anyways, that's it for the video.